Hi, this is Greg. Welcome to the channel. If you're new to the channel, on this channel we talk about markets and investment. And on this episode, we're going to be talking about, is Intel still a buy? Now, some time ago, near the end of last year, 2020, I originally recommended Intel, and at that time it was selling for around $44 a share. When I last checked, it's around $57 a share, so it's experienced a 30% increase. Going back several weeks to a month ago, it traded as high as 68, but it's backed off quite a bit then, so it came back on my radar screen, and that's what we're going to talk about in this video. Is it still a buy? Now, before we get started, if you find value in this video, please like and subscribe. It really helps me, really helps the channel. And don't forget to hit the bell so you get notified for future presentations. Okay, so since I recommended this stock, quite a number of, in my view, quite a number of bullish things have happened. One being an activist investor named Dan Loeb purchased $1 billion of the stock shortly after I recommended it. And no, I didn't know. Dan didn't call me up and tell me he was going to do that. But as it turns out, literally weeks after I recommended it, he purchased $1 billion worth of the shares. And in addition to that, if you don't know who Dan Loeb is, he's the head of Third Point Investors. And he is basically an activist investor, which means that he takes an active role in the company. Okay, so this was viewed by the market and by me as, a very, very bullish move. Then again, shortly after I recommended this stock, another very interesting and very positive thing happened. Pat Gelsinger was named CEO to replace Bob Swan, and he started his career like 30 years ago at Intel, and he started at a lowly position, and he worked his way up to head technology officer, which at Intel was a huge position. He left to be CEO of another firm, but now came back to Intel as CEO. And I view this, and the market generally viewed this, as a very bullish move. Now, very recently, the stock sold off. It's down around 10% from the high, and that's one of the reasons it came back on my radar screen. I thought it should do an update, plus all the great things that have happened since I originally recommended it. Okay, so last week the company reported earnings. Came in at $1.39 a share for the quarter, and analyst consensus was around $1.14. So for that first quarter, it basically beat analyst expectations. Although they beat on a quarterly basis, the year-to-year comparison was down about 0.8%, and this was largely due to a slight decline in revenues in their data center business, which was viewed as a negative on Wall Street, and so the stock sold off. I didn't think it was a big deal, and neither did Gelsinger. And but the market reacts, or overreacts in many cases, to every slight decline, and never looks at the big picture or the long-term prospects. Okay, just to give you a little context about what I'm talking about here, let's just look at some of the history of where the stock has been since I recommended it. Let's take a look at, here we are on my trading account. Let's take a look at the historical quote so we can see what's happened here. And here you see the history of it. Let's go back 6 months. And I recommended it down around here somewhere. When I recommended it specifically, it was down around 44. As you can see, shortly after that, it started going up quite rapidly. In early 2021, it hit a high of 63. Then it came down again. One thing about Intel, it's always characterized by sharp sell-offs. So when you're in the stock, you have to be, you can't be faint of heart, because it's just a matter of time before it goes back up again, but it will go down. And then you can see in April
It gapped up here to 68. I think around 68 was the high. And here is the sell-off, the recent sell-off that I told you about, and the current price of almost 57 is where we are now. Let's just take a very quick look at the technicals, because I always like to show you where we are technically with the stock. Okay, here we can see there are 5 technical measures that I look at. I'll post a video in the description where I did a whole video on the technical analysis. You can take a look at and see how I look at these things. But as you can see, up here is the Bollinger Bands. You can see that they are, it's not completely at the bottom of the Bollinger Band, which is 1 standard deviation below the 50-day moving average. But it's pretty darn close. And you can see here, as far as the slow stochastics are concerned, which is an oscillator index, it's been oversold for quite some time. And you can see in the relative strength index, it's oversold. In the momentum index, it's oversold. And also money flow, it's oversold, which means that net money is flowing out of the stock. So as you can see from this, the stock is in a range where it is attractive to purchase at this point in time, and I think this is a great entry point for you.
So to start things out, what I really want to do is, with that background, I want to play for you excerpts from a very interesting interview that Bloomberg did with Gelsinger, and I think it's very instructive because it tells you exactly what his plans are, what the vision is, which I personally am very excited about, and it talks about some of the massive investments he's going to be making to really revitalize the company and focus the strategy on regaining a lot of the market share that they lost to many of their competitors. Okay, so without further ado, let's check out Mr. Gelsinger.
Pat, thank you so much for taking the time. Look, shares still down this morning. Investors really concerned about margin, though you did slightly raise your full year forecast. What do you have to say to them right now? What do you have to say to the skeptics?
Well, right now, I just say a little bit disappointed to see the markets down on us. Usually when you beat by $1 billion and raise the year by $500 million, I'd expect a little bit better response from the markets on that. So disappointed to see that. But we also understand some of the concerns around data center and where we are. We had a blowout last year in data center in the first part, so it was a tough compare. And we were a bit ahead of where we thought we'd be on data center. We just rolled out some major new products in that area. Also, as we're starting to move into our 10 nanometer and our 7 nanometer, exciting because it means we're getting more competitive and back on our front foot with our manufacturing capability. But it does bring some cost into the business as we bring up those new technologies as well. So our story is a very different one. We are leaning in, we're executing, and we feel good about our future.
Now, you explained that drop in data center revenue as an inventory correction. You said it was temporary, but investors are really concerned about long-term lost market share. Is that market share gone for good? And, who fills that gap?
Well, we feel like we just launched a major new product, Emily, our Ice Lake product launch, which is over 50% performance improvement in key areas like AI, where we're over 70% performance improvement, and the ramp for that with our customers is going very well. We also pointed out that, hey, enterprises are starting to come back to life, good growth in the government sector, and cloud guys, this is a period where they were digesting or building out, and we're starting to see them lean into the business as well. So we feel like, boy, this was the bottom, and we're ramping this year, and we're seeing all the signs that that will be the case. But we are going to fight for market share. We also commented that, hey, we are going to be aggressive here. We're bringing our software, our platform, our new silicon assets into the marketplace, and we're going to be quite aggressive in holding and winning back market share in this critical business for us. Intel is back, and we're going to be very competitive going forward.
So you mentioned winning back market share. We heard Tim Cook seriously touting Apple's M1 chips in their new Macs, the iPad. I just spoke with an Amazon executive who said they want to see their new chips in not just servers, but in Kindles, in Alexa. You know, since you unveiled your Foundry ambitions, what better indication do you have that customers like that will come back when, you know, to be fair, they're also competing with your designs?
Yeah, and overall, what we've described with our IDM 2.0 integrated design and manufacturing strategy, that we're going to be both producing our chips, but also being a foundry for other people's chips. And the response to that has been tremendous from the industry. And I'd point to the fact that today there's so much concentration and very few suppliers, mostly in Asia, and the world needs a more balanced supply chain, both Europe and particularly the U.S. We need manufacturing here done by U.S. companies, and we're stepping into that in a big way. We announced our 2 new fabs in Arizona, $20 billion investment, and we already have over 50 customers in our pipeline who are working with us on taking advantage of these new foundry service capabilities. Great response. But I'd also say that many of the customers, and a few of those that you mentioned in your list there, they're looking and saying, oh, I can now use Intel's products and combine it with my intellectual property and come up with more optimized hybrid solutions as well to better meet their costs and needs for the future. So this is a new chance for us to engage with the largest cloud manufacturers, the largest tech companies in the world, and give them new opportunities to innovate with US-based manufacturing, innovate with Intel-based IP, and really bring their own capabilities to the market. And so far, the response is very encouraging to those new capabilities.
Now, historically, Intel had gross margins over 60%, which reflected the strength of the product, reflected the strength of the manufacturing. Do you think you can get back to that, and when?
Yeah, we do. As we said, this is an investment cycle for us as we're coming in with the new factories ramping up. Also building back our process leadership, so we're putting more into the engineering. We're seeing engineering teams wanting to come back to Intel and bring us back on the front foot there. But we do expect that over time we get to industry relevant margins in our foundry business. We're going to be competitive in that area with leadership technologies. It's a good business area. As our products get back to leadership and unquestioned in every category we're participating in, leadership products produce leadership margins. So we do view this as a cycle, and we will be getting back to the margins, the leadership, and the competitiveness that the industry has grown to expect of this great iconic company, Intel.
You talked about supply constraints, and we've talked a couple times over the last couple of months about the chip shortage. Do you have any new inputs on when that will let up and how?
Yeah, it does take a while, Emily, to build new factories. And you just don't turn them on overnight. And as we'd say, we sort of had the perfect storm. Demand was starting to accelerate, and then COVID caused demand to go off the charts. And supply chains got disrupted, so supply diminished. And that gap is pretty large. And as I've said, I think it's a couple of years until we get back to a more reasonable supply demand. And we're investing, as well as others in the industry, to build out more manufacturing capabilities. But this is a couple of years until we see things get back to where they need to be. We've seen very good response from the administration and what they're looking for American competitiveness in the manufacturing area. So quite pleased with the Biden jobs plan for research, for broadband, and manufacturing and semiconductor investments. So this is going to help us go faster and bigger in the industry. But yeah, shortages will last for a while.
Pat, good morning. It's Guy. Can I just pick up on the point you just raised about the incentives that are being provided by governments? First up, do you think 20 billion is enough to be long-term competitive with TSMC? And TSMC, they're based in Taiwan. They get huge advantages. There are huge incentives that come from government, both state and local. And I'm wondering whether you think you've got enough from the US government to be competitive against that. And do you think actually the US government needs to do more to attract more fabrication back into the US from Asia?
Overall, when you look at the big numbers, Guy, the U.S. 25 years ago, 37% of manufacturing on U.S. soil. Now that's 12%. And most analysts before this last discussions were predicting that to further decline. And we say for something so critical as semiconductors, remember the world is becoming more digital and everything digital relies on semiconductors. Having less and less of that in the U.S., wow, this is a great risk and issue, we believe, for the industry. We need a more balanced supply chain across the globe. And that's something that we're leaning into very aggressively. What's been proposed, the $50 billion that's been suggested in this area and is working through Congress, proposed by the White House, is a good step forward. And we believe that's going to be enough to stop the decline, Guy. But we believe more than that will be required to get us back. And I've suggested that we lay out a moonshot for our nation to get back to 30% of world supply on American soil by American companies with American IP. And I think such a focused area for such a critical infrastructure industry is the right thing. As you suggest, when foreign companies are seeing, and we estimate up to 40% of a $20 billion fab investment being offset by government incentives, wow, that's a competitive gap. And while we're encouraged, we do think this requires a national agenda, and we've been very pleased with the Biden administration's support in this area. It's critical, we believe, worldwide, and we're excited to be putting our chips on the table. And I'd emphasize, Guy, that we've made these commitments for our next two fabs without any incentive commitments. We're putting our chips out there, and we want to go bigger and faster with additional support from U.S. and European governments.
Pat, this is Alex in New York. Can you, A, put a number on how much you want to see come out of the government in terms of support, and B, can you do it if you have to pay more taxes?
Yeah, we believe a combination of incentives, taxes at the federal tax relief at the federal level and at the state level. The $50 billion is a good start. We've agreed that we need to study this more carefully. And in fact, I'm talking to Secretary Raimondo later today, in fact, and making sure that we have some agreement on what's it take to get back to that moonshot that I suggest, 30%. But I think the industry, we have bipartisan support in Congress, that the $50 billion is a great start. That's at least enough to stop the decline, if maybe not to see some reverse in it. But I do think it's going to need to be, larger than that, to really get back to this moonshot that I'm suggesting is simply the right thing for the nation. This is an industry that we created. Every piece of life is going on to digital platforms, and we want to make sure that we're well positioned for the long term of the industry and our nation in this area.
Pat, Emily back here. Intel is still benefiting from a record year for PCs with so many of us on lockdown. As the world returns to work, as the world returns to school, what's your outlook on PC demand, and does it drop back to where it was ultimately?
Well, yeah, thanks, Emily. And, it has been just a stunning acceleration in the PC industry. And we, had over 50% growth in our mobile laptop business in Q1, just off the charts. This is probably going to be the largest PC shipment year ever in the history of the platform. And, we're getting back to 1 million units a day in this area. So a great momentum. But we do think that what's happened is that people are now becoming multi-PC households. We're seeing entire economies where we might only have 6 or 7 PCs for kids in educational environments around the world, where we just have way more PC penetration. We've also seen through lockdown that we haven't seen the normal PC refresh, so we're looking into a PC refresh cycle. So our estimates are that we have a long way to catch up with today's demand, and we're expecting continued growth in next year and the following year as well. The PC is the staple for a distributed work from anywhere, help from anywhere, and learn from anywhere platform for the globe.
Okay, so from looking at that, I think you can probably see why I'm excited about it. I mean, this guy is so knowledgeable about the business. He's so smart. He's got so much experience. And I think he's got a very, very good strategy to reclaim a lot of Intel's lost grandeur. So right now, I want to tell you basically the 4 main reasons why I am still very bullish on Intel. and why I think if you do some of your own research, you will tend to agree with me, and I think there's still a big opportunity to buy this stock. First of all, Gelsinger's new strategy to revitalize the company and position it as a leader in the industry is very exciting to me, and there's no better example of doing that other than this $20 billion investment he is going to make in 2 new fabrication plants in Arizona. Along with this, he has made the declaration that America will go from its current low point, really, of 12% of the world's semiconductor chips being made in the United States to where it used to be, which is 30%. And the other great thing about this is he's committing to make these investments in the United States and do all of this with U.S. labor. Now, what could be better than that? Number 2, as I've said many times on previous videos, I think Dan Loeb coming in is fantastic. It gives me a lot of confidence. He's not just making a passive investment. He's coming in with $1 billion of investment, and he's taking an active role on the board, and he's also making some very good recommendations, which I think Gelsinger and the board are listening to, which to me is very bullish. The third is market dynamics. Right now, there's a massive, massive chip shortage virtually in every area of chip manufacturing. Okay, and some of this is due to the pandemic, some of it is due to other market forces, but I'm sure you've heard on the news that car manufacturing is almost coming to a halt in some cases because they can't get the chips, but this is across all areas of the chip market. And also some of the negative things that you've heard recently, like Microsoft is making their own chips, or Apple is making their own chips, or Amazon, etc. They're making their own chips, but they're not manufacturing them. Those chips have to be contract manufactured by other companies. And what Gelsinger is saying here is he is going to be a major supplier of those manufacturing capabilities, which is a major positive. And then the fourth important bullish reason for why I think going forward Intel has a lot to run is it's still very cheap on a valuation basis. Now, when I first recommended it, when it was trading at 44, it was trading at roughly 9 or 10 times earnings, okay? And AMD, I think, was trading at 100 times earnings or something ridiculous like that. But if you look today at their competitors, AMD is trading at 33 times earnings. Taiwan Semiconductor is 31 times earnings. And NVIDIA is trading at roughly 83 times earnings. So you can see the market is still penalizing Intel for the mistakes that they've made over the last 10 years, and for many investors still do not believe in the story and are still not sold that Intel can once again become a major leader in the industry. So that's pretty much what I have to say for this video. If you got value out of it, please like, subscribe, and hit the bell. It really helps me out, and it'll ensure that you'll be on board for future videos, which will be coming your way very soon.